Hello traders, good morning or good afternoon depending on where you are. Today is the 15th of July 2024 and this is Mohamed Yaoud. I'm the Chief Markets Analyst at PO Prime. Today of course is the time for our weekly analysis webinar. Let's discuss the markets. We have had a lot of news coming in during the last week. We have had brilliant moves on the dollar and on gold. We almost expected everything that happened luckily in the markets during the last week. And today, of course, we're going to have a look on the markets. What do we expect? What are the key things or the key risk events that we need to look at during this week? How to be positioned in the market? What are the best trade ideas as per the technical analysis, and what are we expecting? All of this will be answered during today's webinar. So thank you everyone for joining me today. We can see we have people from the MENA region, and we have people as well from Russia and all around the world. So thank you very much for joining me today. Of course, if you have any questions, please make sure that you leave it in the comment section below. So by the end of the webinar, I'll make sure that everything has been answered for you. And let's start by having a look on the economic agenda for this week. And of course, starting with today, it's the 15th of July, it's Monday. And pretty much we had some data coming out from the Chinese economy for the GDP, which is slower than expected and slower than the previous reading for the second quarter of this year, 2024. And moving forward, what do we have on the economic agenda? Pretty much nothing today. We only have the industrial production index from the Eurozone on a yearly basis and, of course, on a monthly basis. It is important, however, during this week, it's not the most important thing that we will be looking for on the Euro agenda. There are more things that we will be discussing shortly. We have the Empire State or the New York Empire State Manufacturing Index for the month of July. Some data coming out from the Canadian economy for the sales, manufacturing sales, wholesale sales. So far, I find really nothing that we can say it's a risk event. A couple of data that we will be looking at. However, we don't really expect that much volatility during the day. But by the end of the day, of course, it's the most important thing that we will be looking at for today. It's a speech by the Federal Chairman, Jerome Powell. Of course, what happened during the previous week was quite interesting. We had the CPI data coming on Thursday, which was brilliant. It was better than expectations. And when I say better than expectations, it was lower than the previous reading and lower than expectations. So currently, we all know that the most thing that we are watching in the markets are the data coming out from the US economy, especially the inflation, which is the CPI and the PCE figures, in addition to the labor markets like the NFP, like the unemployment rate, etc. So for the CPI, the Federal Reserve would want to see that the CPI or the inflation is cooling down, so we can start expecting that the Federal Reserve will cut interest rates in September meeting. Of course, we have a meeting for the next one would be the 31st of July. Markets are not pricing in any rate cuts during this meeting. However, starting from September, we almost are certain that we will be having the first rate cut by the Federal Reserve. It's almost priced in by the markets or expected by the markets with a probability of 90% for a first rate cut, thanks to the data that we had, which is the CPI, lower than the expected and lower than the previous reading. It definitely shows that inflation is cooling and even more than expected. So the Federal Reserve can and will start cutting interest rates without having to fear about, the persistent inflation pressures or the sticky inflation, as they would say. On Friday, we had the PPI numbers, which is the Producer Price Index. It's an inflation number, but it measures the inflation from the producer side and not from the consumer side. It was higher than expected, higher than the previous reading. However, it didn't really affect the markets because when we look at the PPI figure components, it wasn't really that bad. When we talk about the final goods demand, it was lower than the previous month. When we look at the final print, let's say as the core core PPI or the super core PPI, which excludes food, energy, and trade services. It was basically lower than the previous month. It went down to 3.1 from 3.3%. So that data was a little bit not better than expected, but it wasn't worse than expected, or basically it went a little bit higher, but the components show a little bit, easing of the persistent inflation pressures. So today, Jerome Powell will be having a speech that would be at 8:30 p.m. and I'm talking about Dubai time. And of course, it's really important to know what Jerome Powell has to say after the CPI and the PPI numbers. It's definitely something we want to look at, because the last speech we had for Jerome Powell was during the previous week, and it was in front of the Congress, the two-day testimony. His speech was almost, realized by the markets as more dovish than hawkish, because he said inflation is going down, things are doing great, but we just need a little bit more confidence that inflation is easing. So just after the testimony, CPI came better than expected. Is it this confidence that the Jerome Powell wants or not? We will have to listen to today's speech. Maybe we can try and figure out what he really thinks or believes about the CPI. Moving forward, and tomorrow on Tuesday. Okay, guys, during this week, any speech by any FOMIC member is really important. We will have to watch them. We will have to understand what and how they think, because this is directly just priced in the markets, whether there is a cut. Okay, there is 90% a rate cut in September. Will we have another rate cut in December? Will we have more rate cuts? Some people are now expecting, okay, a rate cut in September, but a super-sized rate cut, like a 50 basis points or half a percentage point. Will this happen? Will it not happen? It all depends on the data and how FOMIC members, through their comments, believe what is the best course of action. So tomorrow on Tuesday, we'll also have the speech from the FOMIC member Dali. And what else do we have for tomorrow? We have the ZEW economic sentiment coming out from the Euro economy and the German economy. It's really important. How is the economic sentiment doing in the Eurozone? It's expected to go down a little bit from 51.3 to 48.1. That's for the Euro economy. It's expected to go down greatly on the German economy. From 47.5 to 41.2. That's really bad expectations. However, we don't really care about expectations. We only check out the numbers after they are announced and compare it to the previous figure. Moving forward to Tuesday, we also have the retail sales, and this is really important to look at, because what is the retail sales? It's definitely a measure of a leading indicator of inflation. Just let us say it in those exact words. If the retail sales are higher, definitely means that still consumers are willing to purchase retail goods and services. So if the retail sales for June, let's say, is going higher, it might be a leading indicator for inflation. It's definitely not 100% indicator or a leading indicator, so it doesn't have to reflect on the CPI, but sometimes it does give us some insights into the consumer behavior when it comes to the retail sales. So we have the core retail sales and we have the retail sales for the month of June. Month over month, it's expected to go lower. That's for the retail or the headline indicator. For the core retail sales, it's expected to go up a little bit. It is important, but I don't really believe it will affect markets that much, even if it didn't come in as per the expectations, or didn't came in for lower, because markets are already khalas. It's tilted to the side of cutting interest rates in September. So this information, it is good for the long term, but on the short term, markets have their expectations and their bets already placed in for the rate cut in September. We have the CPI from the Canadian economy expected to hold around the same. That's for the monthly for June, and we don't have really expectations for the core CPI, but we will have to look at the numbers when they come out. And that's what we are expecting, or we are looking for on Tuesday. Moving forward to Wednesday, let me just remove a lot of those data here. I think that's enough. Moving on to Wednesday, we have the CPI from the New Zealand economy and the CPI from the British economy. And I think the CPI from the British economy is something that we will definitely have to look out for. Currently, as we speak, for August meeting, the Bank of England is expected to cut interest rates by a 50% probability. So 50% says there will be a rate cut, 50% says there will be a fixing of interest rates. It's quite a tie, but the CPI numbers, which is expected to slow down a little bit from 2% to 1.9%, is something that we will definitely be looking for, as it will greatly impact the expectations and probabilities of the next Bank of England meeting. We also have the core CPI and the CPI. Okay, so it's the CPI day, let's say. On Wednesday, we have New Zealand, we have the British, as well as the Euro CPI also coming out, expected to ease a little bit on the headline number from 2.6 to 2.5. We have the building permits and the housing starts, some data coming out from the real estate market. Definitely something to look for. Do we have any speeches here? Yeah, we have Waller speaking. So today we have Jerome Powell. Tomorrow we have Daly, and Wednesday we have Waller from the FOMC, or from the Federal Reserve. We will also look at the crude oil inventories, which is the weekly figure. We all know that. Moving forward to Thursday, it's the big day for the euro. It's the Bank of, or the ECB, European Central Bank, meeting for the interest rate decision. And expectations so far are to keep interest rates as it is. But however, it's not really important to know what they will be doing during this meeting. As we know, it's already expected, it's already priced in the markets. All of the comments by Christine Lagarde and all of the fellow members from the ECB is more tilted towards that we will be keeping interest rates for a while. However, markets will be looking for any forward guidance, any hints by Christine Lagarde during her press conference about the next course of action, because the previous meeting, it was cutting interest rates. Current meeting, or the next one, expected to fix interest rates. Okay, how about going forward? What will be the comments on the CPI figures, which will be one day just before the meeting for the ECB? So I wouldn't really care about the meeting itself or the interest rate decision, because highly, like 95%, it will be fixing interest rates, leaving them unchanged. But any forward guidance from the ECB will definitely affect the trading decisions on the euro during the next period. And we also have the jobless claims from the US economy. Yeah, I think that's what we will be looking for. And yeah, the ECB, just a quick comment here. The European Central Bank meeting, I don't really believe it will drive a lot of volatility in the markets, because people are used to be trading the news and, you know, opening the press conference on one screen and opening the euro versus the dollar or any other pair on the other screen, waiting for any comments and just placing trades, whether buy or sell, depending on what's being said. I don't really believe that you can do this during this meeting. Anyway, Christine Lagarde, since she came president of the European Central Bank, you don't really see a lot of volatility during her comments or during her speech. But what will be said during the press conference will have a longer term effect, or let's say a medium term effect, on the euro trades during the next 1 to 1.5 months until the next meeting is out. We end the week on Friday. Again, Daly will have another speech on Friday. Another speech by Bowman from the FOMC. We have the retail sales from the British economy, which is definitely something we will also look for. We have Williams and Bostic speaking from the FOMC. So 4 speeches on Friday. So during this week, we have someone from the Federal Reserve speaking every day, is it? On Thursday. No, we don't have on Thursday. It's only Thursday that we don't have anyone from the FOMC speaking. But on Monday, Tuesday, Wednesday, and Friday, we will be having speeches from the FOMC on the markets, on the data coming out from the dollar and from the US economy. Let's have a quick look on the technical analysis. What do we expect and what do we have here? So the dollar index has been under great selling pressure during the previous week, and it's no surprise. All of the data is in favor of selling the US dollar. Of course, the comments might continue to support the selling or negative pressure during this week. However, there isn't really any problem if we can see some retracement from those levels of support. Look how many times we rejected those levels of support, which is 104 points. We have had this level here once, 2 times, if we consider this as 1, 3, 4, and we are around the 5th touch. Eventually, of course, the levels of 104 will have to break. Okay, I don't really believe we will be having any reversal from here, but a retracement from the levels of 104 is something I'll definitely look for, especially that we failed to reach the previous resistance here. So we were having 1, 2 highs around the same level, which is the levels of 106.50. The last upward swing failed basically to reach those levels. The upward momentum was overall not so great, so it indicates that on the longer term, the selling pressure is dominant on the US dollar, of course, technically and fundamentally, as per the news. So during the week, I do really expect the levels of 104 to be broken, and we will be continuing to trade lower, maybe to the levels of 103.17 and to the levels of 102.35 if we break the 104 levels. However, during, let's say today, so far, we are seeing the downward momentum just, fading here. How do we know this? Of course, the momentum is not able, to form any lower lows. That's number 1. And number 2, even if you look at the price action, you will find that this retracement, that was a great one. The other low was just slightly lower, and we had another retracement overlapping the previous retracement. So when you look at retracements, relations to each other, so that was a retracement here, okay, and that was the following retracement. It's well within the same price range. This isn't a strong downward trend. The strong downward trend would be something like this, where retracements don't really overlap in the price zone. However, we're having some sort of weakness in the downward trend. Definitely something I can expect because we are trading near support, and we also have this bullish divergence here, slightly bullish divergence. So I would really love to see some upward moves first on the US dollar, maybe to retarget the levels of 104.55. Sorry. To gain some more selling pressure and continue the move lower. This doesn't mean I'm bullish on the dollar. I will not be basically buying this pullback because we are in a clear downward trend, technically as well as fundamentally. However, I will wait for this upward move to conclude before adding to my bearish positions on the dollar. This is something I do really expect to take place during the week. And yeah, this is how I'll play out with the dollar. Hello from Zambia. Hello everybody. Hola everyone. Hello everyone. Someone is speaking here in Malaysia. Such a pleasure to watch this webinar today. Thank you so much. Hi everyone. I hope we all have a great week. I hope too. Hello all. Very informative as always. Thank you very much, Ron. Thank you everyone for joining me. And yeah, let's have a look on the euro. Guys, if you have any specific pairs you want me to look at, please leave it in the comment section below and I'll make sure everything will be answered by the end of this webinar. What's happening on the euro versus the dollar? We are definitely facing resistance here. We also have resistance here. We also have resistance here. So let's have a look on the weekly time frame. The weekly time frame is pretty bullish. The previous week almost didn't have any lower wick. We just continued moving higher. We started this week with a downward gap. Okay, as we said on the dollar, the US dollar is generally bearish, but I'll be looking to short after this upward move that I'm expecting to take place. And let's say I'm expecting exactly the opposite on the euro. So that's a great bullish move. However, it's really late. To be honest, I didn't buy the euro versus the dollar. I don't really trade that pair. However, if you do, and you haven't yet bought the euro dollar, it's too late to buy this. And it's too early to sell it. Okay, so my personal opinion would be wait for a retracement, probably from this level. I would say this level is the greatest. Okay, let me just refine those levels here. So 1.0920. Hector says, please, can you analyze gold? Of course, I'll do gold. Don't worry. The 1.0920 is the level I'll be looking for at the euro to start a bearish move. Okay. Again, that was a great upward move. However, we are losing momentum. So maybe we'll just head higher to 1.0920. We will start a bearish correction. And after the bearish correction, maybe we can buy the euro during the week. That's a clear price channel. So the target for the price channel or the upward limit is just slightly above the levels of resistance we have mentioned. So I am looking at maybe something like this on the euro before moving higher. Of course, it's too much to expect technically. However, the euro is bullish, super bullish. I'm expecting more to the upside. However, as we said, it's too late to buy right now. So I'll be looking for a proper retracement, probably to the 1.0850. And then I'll be adding to my long positions or initiate new long positions on the euro versus the dollar. Pretty much somehow the same could be, I think, applied on the pound. Let's see, where are we trading at the moment? Okay, it's not. We are well above support on the weekly time frame, well below resistance. We are just between support and resistance on the weekly. It's bullish, doesn't really give me any direction so far. On the daily, do we have any price action of interest here? This might be a level of interest. Is it 1.902950 maybe? Little bit, yeah. So we are just smashing levels of resistance. We broke above this level. We also broke above this level. We are definitely aiming higher to the 1.3140. But the question is, will we continue moving higher without a retracement or not? That's the question. Let me check Fibonacci expansion here. The nearest target is 1.3053. Okay, so the daily is definitely not giving me any bias. So the general bias is that we are going higher. We just want to know how can we catch this pair. Because definitely, again, it's too late to buy. Momentum is already weakening. And of course, it will be more apparent on the slower time frames. That's the level of resistance, the latest one, short-term resistance. That's the level of support. Okay, I think the pound, oh, it's still showing positive momentum on the 1 hour time frame. Okay, let's do two scenarios, because currently we have two scenarios waiting to take place. A break above the 1.2990, probably something like this. We are heading higher without a retracement. I wouldn't really like this scenario, but it is, because we had a huge upward move. This seems to be like a flag pattern, which is a short-term correction, and we are expecting somehow another leg like this higher. The only condition is the levels of 1.2990, which we are just 4 pips away from. That would be our scenario to trade the pound. The other scenario would be rejecting the levels of 1.2990, breaking support 2960, then we would be starting the downward correction. This to me seems more explainable, because we are expecting some upward moves on the dollar and some downward moves on the euro, so I think the pound should follow. The 30 minutes time frame, we should really now start to go down to the 15 minutes just to know what's happening here with momentum. I don't really believe we will be able to break above the 2990. So we have explained the two scenarios that I personally would be waiting to play out, and let's see how they go. But in the time being, of course, the pound is super bullish on the weekly and the daily time frame. What's happening on the dollar versus the Japanese yen? A great downward move, and it was a brilliant idea by the Bank of Japan to interfere in the markets just as the CPI numbers were coming out on Thursday. Exactly what was happening is the Bank of Japan interfered in markets because, yeah, let's, benefit from weakening of the dollar by boosting as well our Japanese yen. So it was a clever move. What do we expect on the 8 hour? Okay. Let me have a look on the weekly. Of course, it's bearish. On the daily, it's not so bearish because this candle was, of course, smaller than the previous one, which is for the intervention, upward move. We're having some sort of supports here. We can see this on the 4 hour time frame. So I think that the dollar will reject those levels. Again, we are losing momentum to the downside. So the levels of 1.5750 is really important to watch for on the dollar yen during the week. I personally believe that we will be rejecting those levels for an upward correction, maybe to retest the levels of the previous high, 159.35. And we might see a continuation of a sideways range on the dollar versus the Japanese yen during this week. I think it will be pretty much the same on the pound dollar. We have created some supports here. And we are pretty much doing nothing. A move lower to the 204.30. This is a great support to maybe buy back to the levels of the previous high, 206.30. But we will have to wait and see how is the price action doing when it comes down to retest those lows. Of course, we can definitely just move higher directly. It's a possible scenario. But you know, guys, we always say when markets are moving sideways, this is a sideways range. You have a resistance, you have support, multiple supports. And between the supports and resistances, the sideways range is there for a reason. Even if it's a brief sideways range, it's called an equilibrium price. Markets have reached those levels and they are happy to trade around those levels right now for some time. Okay, so during this, the middle line between support and resistance, it's exactly the equilibrium price. So let's say currently the pound versus the yen is trading around 205.30 as the equilibrium, and you will always see that the equilibrium price always has price action of rejection around it, because there is a seller here and there is a buyer here, so it's just going nowhere. In the sideways range, we always trade near supports or resistances, never trade in the midline between supports and resistances. This is the equilibrium price. Literally, price can go anywhere. So right now, we have prices just around equilibrium on the pound versus yen. Of course, a move lower near support. If we have bullish price action, that's a good opportunity during the week to buy and target. So if price went down, you can buy here, stops below. Your first target should be the equilibrium, and the second target should be the other limit of the resistance or the sideways range. The other scenario would be if prices went higher, you will be waiting for bearish price action to short back to the middle line or the equilibrium and to the support. Of course, you can never do this without waiting for confirmation from price action first. I mean candlestick patterns to show that we are rejecting either support or resistance, and then you trade. This is a good strategy to trade the sideways range. However, your last trade will always be a losing trade. Let's say you bought this from support, you sold this from resistance, you bought here from support, and you will keep on playing this ping pong trade. Eventually prices will have to leave the sideways range. It's a good thing and a bad thing. The good thing is, or the bad thing is, your last trade in the sideways range did hit a stop loss. But the good thing is, once prices break this support, it will give you a new direction. So it will give you a chance. In this case, you were buying or you were long, prices went down and hit your stop loss. It will definitely, almost 90% of the time, it will give you a chance to reverse your trade, because it's now breaking out of the sideways range and it will start a new direction in the market. So of course, guys, what I'm telling you, it's not 100%. It doesn't always happen by the book. However, by experience, it does work. The sideways range markets, people will most often tell you, stay away from sideways markets. You can stay away, but when you have a sideways market, when you have clear support and resistances, why not trade the price and just, target the other limit? It's time for gold. It is time for gold. What's happening here is we have reached a critical zone for resistance, which is the 2410 or 2415 almost. You guys who are trading with SMC, Smart Money Concepts, or ICT, or whatever it is, you always will call this the order block for sellers. We rejected those levels, and look how gold went lower. We are back to test those levels I don't really believe it will be so easy for gold to move higher before maybe moving in a sideways range for some time to give some room for the dollar index to breathe from the levels of support 104 that we mentioned, or at least a retracement. So I'm looking for a correction at gold, either by time or by price. What is the correction by time? This is a correction by time. Prices are not moving lower, they are just moving sideways for some time until they gain momentum to break higher. A correction by price is something like this. This is buy time, this is buy price. When prices move lower, this is a correction where prices are correcting lower. But this just moving sideways to gain some upward momentum to continue pushing higher, this is a correction, but we call it a correction by time. So currently, I really would say the levels of resistance, let me just remove this, the levels of resistance 2418 would be hard to break above, okay? Of course, it's still a reasonable probability. It still can happen. However, in order for you to be well prepared to trade gold during this week, your eyes should be on the 2418 level. It's the make or break. Of course, a break higher, okay, thank you very much. We'll continue moving higher. We still have, let's say we can target the levels of 2430. That's reasonable. So it's a make or break. However, on the other side, rejecting those levels of resistance, where would we go? We will definitely go back to support again. And yes, it's a sideways range. And yes, what we just explained on the sideways and the midline or the equilibrium price, yeah, it stands here. Let me just get you the equilibrium price from here to here. Remove this resistance. Get me the 25. So that's the sideways range, okay? How do you know the sideways range exactly? You measure or you define the highest price and the lowest price in the sideways range. And then you start dividing the area between them into 4 equal parts. That's 25%, that's 50, that's 75, and that's 100. Of course, Fibonacci retracements will, the tool itself will help you in doing this. And then after you do this, you will mark the first 25% as the selling area, the lower 25% as the buying area, and the 50% is the midline or the equilibrium. Now, what we have is a clear rejection and price action here around equilibrium. This is how you know that you have got the equilibrium price correctly, because why did prices stop here for a brief, you know, even for one candle before moving lower? And why did it come back to retrace and retest those levels again before continuing back lower? When we broke higher, why did we come back and retest those levels? So we are retesting those levels again and again as supports and resistances. This is the equilibrium. Currently, if you tell me, okay, should I buy or should I sell? What should you do? Can someone tell me? Okay, guys, tell me in the comments section, should we buy right now or should we sell? Given what we have explained about the sideways range, please, we'll just be taking a quick survey just to make sure that people are listening to what is being explained. Would you buy gold right now or would you sell it? What is WZ? I'm not getting you, Mahmoud. Do nothing. Buy, sell, buy. Okay, it's literally everyone has another opinion. Okay, in my personal opinion, okay, it doesn't have to be correct, but in my personal opinion right now, I will go with LP major, do nothing. I'll do nothing. Someone said we'll wait till 2418. Yes. So currently we are just around the equilibrium price that we have just explained. Prices can definitely do anything. We can move lower to target support, or we can move higher to target resistance. Of course, if you go down to the lower time frames, yeah, we can do it. We can know if we are going higher to resistance or lower to support, but it's a 1 hour time frame. I don't want to give you an analysis that will just, you know, expire by the end of this webinar. So for now, I'll personally wait. I'll personally wait around resistance, and when I see bearish price action, I'll short. What do I mean by bearish price action? I mean something like this great engulfing candle. Okay, this is a clear rejection. We had a previous one around here, and the first bearish candle was here. So we have, and on the other hand, this is a great support and a great bullish price action, another engulfing candle. So I will wait near support, near resistance, and wait for price action in my favor. What if we reach resistance? We short like this, let's say. Okay, price moves higher, stops us out. It's definitely something, yeah, it's frustrating to be stopped out. However, in this case, this will mean that prices already broke above resistance, and now you can be looking for maybe, of course, depending on price action, but I mean, we will be having our targets higher. We have concluded the sideways range higher, and we'll be continuing the move. So this is how I'll be playing gold during this week. I'll wait for the price action, the sideways range to finish before I decide for any further move. And of course, a break below the support 23.95 is a definite move lower to retrace, but I find this a little bit hard to happen given the, you know, general outlook on the dollar. I've been doing nothing on US oil so far. We are just in a sideways range inside a sideways range. It's a symmetrical triangle here. Yes, we expect an upward move. We have already rejected the lower limit of the symmetrical triangle, so an upward move to 83.65 is something that I'll be looking for during the day. How about the weekly view? The previous week was definitely bearish, so we almost touched the upper limit of this great pattern. The previous one was a lower low with a lower high. We closed bearish. So the short upward move that I'm expecting on the 1 hour time frame I've just explained might be just to create the upper wick for this weekly candle before heading lower. So I'm bearish on the US oil on the weekly time frame or throughout during this week. Dow Jones is just continuing to move higher, and believe me, it's now, you know, do you guys remember the period during COVID when the Dow Jones and the S&P and all of the US indices were just moving higher? No matter what technical reasons you had to buy or you had to sell, you would always get stopped out of your short positions because it was just eventually moving higher. Currently, given all what happened during the weekend and, you know, the attempt to assassinate Donald Trump and what's happened, it definitely gave him more power. It gave him more voting expectations and probabilities. We are currently expecting Donald Trump to win over Biden by a margin of 70% to a 30%, which is definitely great. Markets, believe it or not, they do love Donald Trump. His policies with the markets, his policies regarding the tariffs, it will definitely boost the US dollar, and it will boost the stock market and the company's results and earning results. So the Dow Jones, the Nasdaq, the S&P, I might stop expecting them or I'll just stop shorting them whatsoever. So now the Dow Jones is already near the upper limit of this wedge we are trading in. It might be a good technical reason to short. Will I? No, I will not be shorting. I will wait for a correction and I'll buy. I'll just be buying. I'll be looking only for buying opportunities on the US indices, because at the moment, even if you bought the Dow Jones at a wrong price, because the markets are eventually going to go higher, markets will correct your mistake. But if you sell at a wrong time, you will definitely get stopped out no matter what. So we are just currently at 40,200. I'm expecting a move lower. I'll not short it, but after doing so, I'll look to buy the Dow Jones and move higher. Okay, guys, do you have any questions? I think I've covered pretty much everything that we need to cover during this session. We have discovered or discussed news. We have discussed the technical analysis on most of the pairs. I'll have 1 minute for you guys to type out any questions if you have. Thank you, as always, very informative. Thank you very much, Hector. And thank you, Amiki. Okay, I think, where's the questions tab? Where is the questions tab? Yeah, here we go. No questions inside the questions tab. For the recordings, it will be recorded, of course, and it will be uploaded on our YouTube channel. It's Pure Prime. So I think later today, you will find the recording for this webinar. Do we have a webinar this Wednesday? Personally, I don't have. Maybe someone from our team at Pure Prime, the analyst team, will have a webinar on Wednesday. I'm not quite sure. You can just follow us on our social media to know our schedule for webinars. Okay, I think we don't have any questions. Thank you very much for watching this. Thank you for joining me, and I've really enjoyed this webinar today with you. And of course, I'll meet you again next Monday, the weekly analysis webinar. Thank you so much for joining. Please trade safe and please stay safe.